President Trump once again lashing out, though, at Fed Chair Jay Powell.
Jay Powell and the Federal Reserve have totally missed the call. I was right, and just about everybody admits that. I was right. He did quantitative tightening. He shouldn't have done that. He raised interest rates too fast, too furious. And we have a normalized rate, you call it that. And now we have to go the other direction. We'll see if he does it. If he does it, you'll see a rocket ship.
We were going to have The Rock on the show, but instead we're getting Roger Altman. Joining us right now to talk about it from Jackson Hole. Roger Altman is with us, Evercore founder and former Deputy Treasury Secretary. He could be one of the stars of Fast and Furious. I just want to be clear about that. Our guest host, Jason Trennert, is also here. Good morning to you. Thanks for joining us. Curious what you made of the president's comments, Roger, yesterday, and what kind of impact you think they are having one way or the other.
Well, I think it's unfortunate to see the president bashing the central bank the way he is. As Larry Summers said on this network the other day, you know, that's the type of thing you see in places like Venezuela. And then, as the Wall Street Journal editorial page says this morning, it's just creating too much uncertainty. So I don't think he's doing anyone any favors with that bashing. And I don't think, actually, that he's helping himself. But that's obviously not what he thinks.
Do you think it's having a real impact, though? I mean, you know, to some degree, you could argue that, Jay Powell has been independent and has tried to remain as independent as he possibly can from the president. And yet there's also an argument to be made that the pressure campaign is working in its own way.
I don't think it's having any impact, at least that I can discern, on Fed policy itself. You have to give Mr. Powell credit for consistency, and by that I mean running his own show, in effect, and not succumbing to this pressure. I haven't seen evidence that he is. And the reason that the effect I think it does have, Andrew, is just on broader uncertainty. You know, you see the president say, well, I'm thinking about a payroll tax cut. And then the next day, nah, maybe not. I just don't think that type of lurching is positive for investor confidence or consumer confidence. But we'll see how it all plays out.
Jason, is Roger right about that? Because there's some supporters, by the way, of the president and the administration who would say, you just have to, that's noise. See past it. The economy doesn't care. Look at the stock market. Look at this. Look at that.
Yeah, listen, I do tend to agree to the extent to which, especially let's say with regard to China, you have on again, off again negotiations. You do have a lot of trial balloons that are being set up. And listen, I would say in corporate boardrooms these days, there's no more courage than there is, let's say, in Congress. Especially after what's gone on over the last 9 or 10 years. So if the tax cut was largely designed to spur capital spending, which would get you productivity. You saw a big spurt in capital spending last year, but it's largely fallen by the wayside this year, and I think it's partly because there are a lot of things going on within the administration that make it difficult to make those long-term plans. I think personally, I think the president's right about the Federal Reserve. By the same token, I would tend to agree with Mr. Altman that I'm not sure from a stylistic point of view this is the best way to achieve it. And I would also argue that the Fed, I don't think it's having any material impact. I know, as you know, some of the people that are on the Fed, and I think among all the institutions in Washington, the Fed generally tends to try to do the right thing as apolitically as possible. It's not perfect. Right. It's a political organization, but it does try to do the right thing.
Hey, Roger, what is your...
Let me assure you...
Go ahead.
Just let me assure you that in corporate boardrooms, everyone is shaking their heads, scratching their heads. And the president needs to be careful from his own point of view about consumer confidence. I mean, 2/3 of GDP is represented by consumer spending. There's a lot of talk. You guys have had a lot of talk about weakening CapEx. But the key to avoiding a recession is consumer spending. And that gets to confidence. And I don't have any evidence that the president's lurching, to put it that way, is having an effect on consumer confidence, but one has to be careful with that.
But Roger, take us inside the boardroom just for a second, though, because you made a comment about the president. Right now, there's a huge debate. We have it at this table every morning about the numbers we're seeing from companies when it comes to consumer confidence. Becky had a great interview yesterday with Brian Moynihan at Bank of America. He seemed to be very optimistic about the state of the economy. And yet then we're looking at the 2 and the 10-year invert, or at least get very close to inverting. And we have these larger questions about whether a recession is on hand. What's the conversation inside the boardroom right now?
Well, I would make 2 points trying to answer your question. One is, I personally think, and I hear, that the risk of recession between now and the end of 2020 is less than 50-50. I personally would peg it at about 20 to 40%. Yes, we all see the inverted yield curve. And yes, historically, we know that what that has sometimes meant. But the consumer side of the economy is good. And we're also seeing another round of aggressive global monetary easing. So I think we're not on track to recession between now and the end of 2020. But it's a matter of confidence in so many respects. And I'm not the president, but I think one has to be sensitive to that.
Roger, I would just ask really quickly, from the corporate board perspective, I feel for a company like Ford that is kind of getting forced into the middle of this argument between the federal government and the state of California about what regulations to follow. Ford itself has said that they would love one national standard, but clearly this is different administrations battling with each other, and the states versus the federal battleground. And for something where you're trying to do things like build plants that make cars, those are long-term decisions. You can't follow the ebb and flow of different administrations coming through.
Well, I have to bite my tongue on that one, Becky, because it's a little bit like an alternate universe. So as I understand it, Ford is saying, let's voluntarily stick to higher CAFE standards of the type that California has promulgated.
I don't think it's that. It's like you've got to play ball with California if they're going to be allowed to set the rules in their state. You can't say I'm not going to sell cars in California.
Okay, but in any event, Ford is saying, we're going to set CAFE standards higher than the president wants. And the president is saying, this is awful. It's very hard to disagree with Ford. And I sympathize with Ford on this. I'm not sure what exactly the president expects Ford to do under these circumstances in terms of the California regulations. It is the largest auto market in the country, one of the very largest in the world, so I don't get it. And I would support Ford.